You know, I was I was thinking to myself, what would I have told myself when I was younger to be prepared for now when you're older, right? So I was thinking about wealth, and it's so important, and I am passionate about telling you how to get your wealth. And I thought to myself, my future self will thank me today. No regrets. Get your wealth, right? Right. My name is Ann, and I am here today to tell you about how to get your wealth, right? And it's so important. I want to let you all know that doing something now will prepare you for later, right? So I am headed outdoors. I'm headed out to my car, and we could finish having this conversation in my car, right?
Hey guys,
So
I
let's.
made it in my car, and I just wanted to have a quick conversation with you all as it pertains to getting your wealth going, right? It's so important. I did a video last week talking about why it's important to get started with an IRA. And an IRA is an individual retirement account, right? So I wanted to have that conversation because you have to get started today. You have to get started today. And I have to say, as a disclaimer, I am not a financial advisor. I am not here to provide financial advice. However, I am a financial motivational coach. I am here to provide you education and information on how to make your life and your wealth better, right? So you may say, well, are you a millionaire? No, I'm not a millionaire. I am a regular, everyday, fantastic person, right? And I work every day. I work a 9 to 5, a corporate job, and I was able to build a little bit of my wealth with my IRA. Of course, I do have a 401k with my employer, but I have an individual IRA, a couple of them outside. Your personal, that's your personal, right? And you may say, well, how did you get started? It's so easy. Let me break it down in 3 easy steps. Okay. So, first, you have to pick which brokerage account or which online investment account that you want to deal with, right? I chose to deal with Fidelity, as you can see here, and I have Vanguard, as you can see there. So Fidelity and Vanguard, right? But you have to choose one. So I chose my main one is Vanguard. I really like Vanguard a great deal. Um, and I was able to put, like I said, I started it maybe with about $250, and I took that $250 and invested it in ETFs. And you may say, well, what's an ETF and how does it work? Well, the ETF, with the money I had, because stocks cost different amounts for stocks, right? And with the index fund, if you don't have that entire amount available to buy one share of stock, then it may be a little challenging. So for me, I prefer to do the ETFs, which you can see here. And I use the ETF because it lets you put, they call it fractional shares, right? So they call it fractional shares. So they let you do the fractional shares, and that means that you could put in $25 every month. You could put in $50 every month, or $100, even if the share by itself costs $300 a share or $500 a share. You could still put money towards it, doing it as an ETF. And you may say, well, Aunt, it sounds like that's going to take forever. No, 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 no. It's called compound interest. And it's also called dollar cost averaging. Your future self will thank you. I am so thankful. I am not a millionaire. I work an everyday job. I also do consulting on the side. And I'm just like you, but I am happy that I have on the side some money towards my net worth, that if an emergency happened, if something happened, I can dip into my IRA if I need it, even though I don't want to do that, because it's for our retirement, it's for our future self, right? But say if something happened, I can do it. And I've been so grateful because I've been able to take care of my needs, take care of my family needs, and still I'm dollar cost averaging in every month. You may want to do reoccurring once a month, or you want to put in every week, or you want to put in every day. You can. And you could do that with the ETF. And
Okay,
I kind of got off.
and taking a look at Vanguard in the site for how easy it is to open your Roth IRA. So they make it very easy. They have 3 steps as well. But before I dive into the 3 steps, let's just talk about what a Roth IRA is, right? So a Roth IRA is an individual retirement account. That's what IRA stands for. And it offers tax-free savings and growth and withdrawals, right? So it says, what is a Roth IRA? It's a retirement account funded with post-tax dollars. The withdrawals are generally tax and penalty free if you meet the requirements. So if you own the account for 5 years, your withdrawals can be tax free. And if you're 59 or older, then the withdrawals can be tax free. But if you're under that, then just know that if you withdraw from it, of course, you will pay taxes on it at tax time. And so that's a good rule of thumb to keep in mind. And it says who can open a Roth IRA. So anyone can open it who has earned income can open a Roth IRA. Now, however, in order to contribute to the Roth IRA, now you must fall within a certain income limits. So it says in order to contribute to a Roth IRA, you must fall within the Roth IRA income limits. Now, you can open a Roth IRA for yourself or even someone else, even a minor, right? You may have some questions about what are the income limits. So I do believe for the Roth IRA, and I could triple check that for you all, but for the Roth IRA, I do believe the income limit is like maybe 150,000, but I'm going to triple check that. So we'll come back to that. Now, the benefits of a Roth IRA is flexible, Tax-free withdrawals, right? So, unlike the traditional IRAs or the 401ks, you can withdraw your original contributions at any time with the Roth IRA without the tax penalties. And there's no what they call minimum required distribution. Okay, so just taking a look at it here and how Vanguard has how to open an IRA, and you want to follow like 3 easy steps, right? So, one, you want to decide which IRA suits you best. And you can simply start with thinking about your age, your income, what you want for your future. And what we mean is they will ask you, do you want like a traditional IRA or do you want a Roth IRA? And so keep in mind that the traditional IRA doesn't give you the tax benefits that a Roth IRA provides you. And that's why a Roth IRA is very favorable amongst people because of that. Um, and your future self will thank you about those taxes, right? So your future self will thank you. Number two, it says consider an all in one fund or customize your portfolio. So with the IRA, you have to fund it, and then once you fund it, you have to tell the money where to go. And so, in this case, you can, if you're working with like a low amount of money, or the ETFs, as I spoke about earlier, will be a good um, selection for you, and you can get that going. Going back to the 3 easy steps. So once you decide which IRA is best for you, Roth or traditional, keep in mind Roth is the better suited because of the tax benefits. And then two, you have to select which ETF you want it to go into, and Vanguard have some really great ones. And keep in mind with the ETF, like I said, you will be buying fractional shares. So if you got $25, $50, that'll get you in the game. Now, what you're going to have to do is be disciplined with continuing to keep it in. So, for example, you want to make sure that you keep it in let's say the Vanguard total stock market, like VTI. And if you just continue to put in dollar cost average in that, it will build. It will build. And yeah, the VTI is a broad diversification of different stocks that's mirroring the US total stock market. So that's a good way to go. Yeah. To opening a Roth IRA. And remember how I told you it's so easy. All you need is your driver's license or state ID, and to have a bank account, like a checking account, because you're going to have to connect your checking account number, your routing number, to your investment. And then when you're ready to invest, you could do like reoccurring investments, like money's reoccurring, like you want every month, you want 100 or 200 going over. That's how you will do that. And you're going to thank me. You're going to watch your money grow. It's going to grow against the market and against the fund that you have it in. And you're going to see that you're going to be doing good over time. I would say just keep putting the money in there and then check back within 6 months to a year to see how well it's doing. You will be pleasantly surprised, and your future self will thank you, right? So yeah, so I will do another video on showing you talking more about how to open it. And this information that I'm providing is purely educational. It's for your education. And the most important thing that I can say to everyone as we have this quiet conversation is to get started. Get started as soon as you can. Don't delay. And someone may say, well, hey, I'm a certain age. Does that matter? No, it doesn't matter. You can start at any time. This is going to be your money. And you will see how well it will do over time. Time is your friend to build that millionaire wealth that you're looking for, but you need time. But if you got 10 years, heck, if you got 5 years, you can benefit from a Roth IRA. So time is good, but you're disciplined to put the money in biweekly, monthly, or even daily if you want it. That is what is going to be needed, and then not touching it unless it's necessary. And just know if you do touch it and it hasn't been 5 years that you had the account, then you will be paying taxes and penalties on it if you're not over a certain age as well, if you're not over 59. So keep that in mind. But again, I say get in the game. This is so important to everyone. Make sure you're taking advantage of investing, because that's going to be money that you could have in the future for a house, a trip, a car, or it's giving you that ability to have. Like a large sum of money and to have it compound, because you may say, well, couldn't I just save my money in my bank account? uh yes, but it won't grow like it will if it's in the stock market. You got it? Because these banks aren't giving you any interest, to compound your money. So, no, but Wall Street does, and the stock market does, and that's how people build their wealth. So, I hope you guys are paying attention. I hope you're taking notes, right? So, with that being said, I'm going to say, have a great day. Thank you for listening, watching my channel. If this information was helpful to you, please share it, because we need a lot of people to know this is what they can do to build their wealth. And your future self, I keep saying it, but your future self will thank you and you won't have any regrets. So I'm telling the young people, get started now. I wish when I was 18, when I was 20, I wish I knew what I know now. I would have had my money in there at 18. And I began working at a young age. I had a summer job at 14, but if I knew then, I would have got one. But it's never too late. So, I can't recall how long I had my Roth IRA. It's been some years, but it has been beneficial for me. Oh my God. I'm so glad I have that. And I'm so glad that I put in there every month, and I dollar cost average in every month. And I try not to touch it unless I necessarily have to. A little bit here and there, I had to dip into it for different things, but and I had to pay the taxes on it, so I did that. But I would suggest just to leave it there and let it grow, because that's for your future self, right? And one of the other things I was going to say was it's definitely beneficial, and you will be so glad you did it. So again, thank you so much for liking, watching my channel.